Okay, guys, I found a website you have to check out. It's called shapeandfoster.com. Shape and Foster is a lifestyle development app that provides monthly actionable insights from 6 experts in mental health, financial planning, nutrition, fitness, yoga, and even a lifestyle coach. It is a one-stop shop for self-improvement. The app provides a proactive and informed approach to improving your mental well-being by enabling practices and habits to be built. Lifestyle development is about enhancing your quality of life by improving awareness, identity, and potential. So make sure that you visit www.shapeandfoster.com for your free 14-day trial.
Well, welcome to episode 47 of the Financially Free Journey podcast, and I am your host, Courtney Dyer. Well, welcome everybody, and thanks for tuning into today's episode. Sorry about being MIA. I have been behind on honestly being able to plan and record and produce episodes over the last month just because I have been finishing up all of my studying to pass my last licensing test to be an investment advisor representative. So now that I have passed my final license, this has been a long time in the making, working full time and having kids. And I recently, as a lot of you know, I just had a baby a few months ago. It was just a lot to juggle and something had to really fall through. And it unfortunately was the podcast for a little over a month, but I am now ready to move on and dedicate a lot more time to things that I love and I'm passionate about, which is really this podcast. I am so passionate about helping you all achieve your financial goals and create episodes based off of a lot of the questions that I've been getting from you guys. And so before we get into really the meat and potatoes of this week's episode, I really wanted to touch on something that I have received a lot of questions about, which is this past week has been wild. I would say the last 2 weeks has been wild to say the least when it comes to the stock market. And if you follow the stock market, then you most likely heard the words like short squeeze, hedge funds, GameStop, or AMC, right? There was even tons of like TikTok videos and memes made about this situation that went down. And this situation took place and it really became viral all over social media. And you may have had to suffer through some conversations with family or friends while you're trying to fake understanding what they're talking about. So I wanted to just give you a quick and a simple to easy understand explanation of what the heck everyone was talking about. And I know at least one of you guys didn't quite understand what was happening in the stock market right now. And that's enough to motivate me to explain this because this is somewhat of a turning point in investment history. So first, you need to understand what a quote unquote short is when it comes to trading. A short is when you borrow a stock from a broker and then you sell it immediately at its current price. Then you hope that the stock's price falls such that you can buy the stock back at a lower price and then return the shares that you borrowed to your broker, but you're keeping the difference. Okay. So let me give you an example because that sounded like a bunch of mumbo jumbo. Let's just say that I want to short XYZ, which has a current price of $10. And I borrow one share and then I sell it immediately at $10. I, have the $10 now, but I owe my broker the one share that I borrowed. Let's just say that the price of XYZ drops to 7. I now decide to quote unquote cover or to buy back my short position. And then I buy that one share at $7 when I sold it originally at 10. So I made that profit difference of $3. But now let's just say that instead of the XYZ price dropping to $7, it goes up to 15. I still have to return that one borrowed share to my broker, except now it's going to cost me a lot more to buy it back. But if I buy it back at 15, so I can return the borrowed shares, my losses will be that $5 difference between selling it at 10 and then rebuying it at 15. So since the price can rise indefinitely, my potential losses and my risk here as a short seller are unlimited. So at some point, I have to buy it back to return the shares that I borrowed. And the more the prices rise, the bigger my losses can be. So let's talk about GameStop. So a few weeks ago, a Redditor, it was called Wall Street Bets, they noticed that this hedge fund had taken a massive amount of short trades against GameStop. They convinced everyone on the thread to join forces and then to go and buy GameStop stock and to buy as much as possible. And what this did is this made the price rise. And the hedge funds that had those short positions, they started to lose billions of dollars, literally billions of dollars. Their losses even surpassed 13.1 billion that the hedge fund shorted these positions, and they bought all that GameStop stock back at much, much, much higher prices. So sending the prices even higher than they had when everybody had gone in and bought the stock. So this is called a quote unquote short squeeze. So now that the hedge fund is declaring bankruptcy and the Reddit thread is combing through other hedge funds with massive short exposure, so they can short squeeze them into bankruptcy as well. All of Wall Street is saying that the public joining together in this fashion should be illegal, but really, they just took a loss on their own game, right? That's what a lot of people are saying, is that they took a loss because they shorted these stocks because they anticipated GameStop is really what a lot of people believe to be a dying business. Going into a store, buying physical games, a lot of stuff is online now and virtual. And so their business model has really been dying down. A lot of people are saying it's really comparable to like a Circuit City, right? Remember, that used to be a booming business, and when the market changed, they went out of business. And who would have thought they were such a big Circuit City? That takes me back to like high school, early 2000s. That was such a big business. But same thing with GameStop. So these hedge funds thought, you know what, this is a dying business. We're going to short the stock. We're going to make the difference when we're able to buy it back at an even lower price than we sold it at, because they were anticipating GameStop to continue to decline in price. But this Reddit group, they increased the volume by millions and millions and millions, which volume can drive up a price. And once they increased that price because of the volume and what they were buying it at, it forced the hedge funds to then buy it again, which doubled the volume that was happening. So it was just an insane situation, and a lot of people were talking about it. A lot of people became investor gurus overnight. And the real question here that has everyone up in arms is that the trading platform Robinhood halted all of the trading on GameStop stock, which is insane because just as it skyrocketed, Robinhood actually physically took away the button that says trade. What does that mean exactly? Robinhood, for reasons unknown but widely speculated, they decided to not allow traders on its platform the ability to buy or sell GameStop stock after it had skyrocketed. So like I just said, that trade button, it just simply vanished on the stock. And Robinhood said that the reason why was to stabilize the market. But many retail investors didn't think that it was for fair or that it was even legal, actually. And because of this, a class action lawsuit was slapped on Robinhood for allegedly depriving retail investors of the ability to invest in the open market and manipulating the open market. And I mean, that's just insane to think about. And so it'll be interesting to follow what happens with that class action lawsuit. But if you had to fake through a conversation with your boyfriend or your husband or your girlfriend or your wife or your dad, now you know, and you can really talk about it if you were interested in what all of that meant, because that was a lot to digest. You may have to listen to that a couple times to have it sink in. So, okay, I know that was a lot to go over and I explained a lot, but I hope that I broke it down in a way that was a little bit easier to understand. So, okay, before we get into the meat and potatoes of this episode, we're going to just take a short sponsor break, but when we come back, we're going to talk all about day trading.
Okay, if you're a conservative, then you need to check out The Jared Dyson Show. Jared is the editor-in-chief of the Liberty Loft, which is one of the fastest growing conservative news and opinion sites online. Jared's show is a hard-hitting opinion show that shares from a Christian conservative perspective, and he gives unique insights and opinions, and so you absolutely need to check out The Jared Dyson Show. It's available anywhere that you can find podcasts. It's on Apple, Google, Spotify, YouTube, you name it, it's there. You can also check out out their website for information, which is www.thelibertyloft.com.
Okay, welcome back. So who is ready to have a little chat about day trading? So day trading is a speculative trading style, and it really involves the opening and closing of positions within the same day or within a short time frame. So day traders, that's probably a situation that you've maybe looked into or you're interested about. But day traders or active traders, they typically use what's called technical analysis and a trading strategy to try and make profits in a really short period of time. And they'll often use margin to increase their buying power, which means essentially buying stock on credit. And so what these day traders do to be successful, they don't just pick any stock and they try to trade it. There has to be some kind of a strategy involved with these rules and the money management parameters. So let's quickly talk about how day trading works exactly. Let's go into the mechanics. Day trading works by capitalizing on short-term price movements in a stock throughout the active buying and selling of shares. So day traders seek volatility in the market, and without short-term price movement, there is no opportunity to be a day trader and to capitalize on that volatility. So the more a stock moves, the more a profit a trader can make, and they can make it or they can lose it in a single day, depending on if their trade is good or not. And that's why traders really must exercise excellent risk management skills in order to keep their losses small while letting their winners run. You can think of day traders as being really a manager of risk. I want you to think about it this way. You put capital at risk in order to try and make more money. But if you mismanage the risk, then you can have a really hard time consistently making money. That's why it's so hard for a lot of people to jump into day trading, because they don't understand those risk parameters exactly. And the reason is because the technical analysis or that entry and exit requirements that work for one strategy, it may not work for another strategy or another person. And it's not helpful to your long-term success to learn a little bit of 100 different types of strategies. It is much better for you to pick a strategy and to research the heck out of it and to learn as much of it as you can. The important thing is consistency and sticking to one of these at the beginning and really mastering it. And if you try to trade 5 different strategies at the same time, then how the heck are you going to know whether or not which one of them was individually profitable? It's going to be really hard for you to track that and see how much it's really costing you to make money. The next important step that I believe is extremely helpful is to convert knowledge to skill by practicing in a day trading simulator. Now, if you haven't heard of a day trading simulator, this is a fantastic tool to take advantage of. You may have taken a few, quality trading courses, or you've read a book or listened to a podcast, and you've been watching, daily trading breakdowns, and maybe you feel like you're ready to trade, and that's fantastic. But the reality is that you're probably not fully ready to trade. Beginner day traders notoriously overestimate their ability to start trading with their real money, and then they lose. And so intellectually understanding day trading and actually being able to react to opportunities and effectively executing them in real time are 2 very different things. And this is where practice comes into play. So you need a trading simulator where you can practice in real time the strategies that you've been looking into and researching until you feel comfortable with these entries and these exits that you're making on your trades. And I would say definitely look up a trading simulator, get comfortable with it, and pick what type of trading strategy you're going to follow and do it over a certain period of time. I would say a few months before you take the leap and start day trading with your own money. And this is just in my personal opinion, but it's a great tool to help you really work out those kinks before you're putting your own money on the line. And if you can't make money in a trading simulator, then chances are that you can't make money in a real account. So this is going to be a really good indicator of where your skill is at before taking that leap. And jumping into a real trading account cold turkey is one of the worst moves a beginning trader can make. The last thing I want to touch on is really looking at a good trading platform that allows you to trade the way that works for you. And what I mean is there are platforms that are specifically designed for long-term investing, options investing, or for day trading, for example. So you need to do research and you need to figure out which one isn't going to charge you an arm and a leg on all of the trades that you're going to be doing. Some of the leading day trading platforms right now, according to stockbrokers.com, is Fidelity, TD Ameritrade, E-Trade, and Webull. And another popular one that I mentioned earlier is Robinhood that a lot of people know about. So, do your research, see what type of trading you're wanting to do. Make sure that you pick a platform that supports that type of trading. Work your way through a trading simulator and make sure that you've worked out all of the kinks, and don't trade with emotion. Once you have a real good grasp on the technical analysis and reading charts when it comes to day trading, you need to make sure you're not trading with emotion. Once you set your take profit and your stop loss, you need to stick to your plan. Do not trade with emotion. A lot of people let's go back to the GameStop example that I talked about earlier. A lot of people lost their shorts when it came to GameStop. And that's because they heard about GameStop from their family, from their friends, from TikTok, from Instagram. Everybody was posting about it. Well, at that point, once everybody knows about it, the stock has already dramatically increased and the value became overinflated. And by the time a lot of small retail investors bought into the stock, it was already way overvalued and it was at its peak. So to continue to be able to capitalize and to make money on that trade, you would need it to continue to go up. Well, GameStop had already reached its peak by the time a majority of retail investors hopped in and started buying that stock. So they lost thousands and thousands. They bought the stock for over $300, over $400 a share, and the stock within 48 hours went back down to $90, $50 a share. And so you need to really make sure that you're not trading on emotion, you're not trading on rumor or on what other people are saying is good. Make sure that you do your own research, you understand what technical analysis is, reading charts, understanding things like a cup and handle, for example, a reverse head and shoulders. These are all patterns that you see when you're a day trader and you are reading charts and using technical analysis to understand when would be a good time to enter into the trade and to exit the trade. And so I hope that today's episode really gave you some insight on what day trading is exactly, and as well as some items to really help you go research and to really help point you in the right direction. It comes down to your trading style, guys, the risk tolerance that you have, the financial goals that you have, and so much more. And if you have any questions after listening to this episode, send me an email. It's financiallyfreejourneypodcast@gmail.com, and we can chat about it. And as always, thank you for tuning in. And if you haven't already, take a second and go subscribe to the show. Leave us a review. Let me know what topics that you would like to hear about in upcoming episodes. And also, if you're not already, make sure that you go follow us on Instagram. It's at Financially Free Journey for more tips and motivation to help you on your financially free journey. Until next time.
So are you sick of hearing about Webull yet? Well, I hope not, because Webull is an amazing platform that you seriously just need to go check out. So make sure to click on my exclusive link in the show notes and sign up and deposit funds today.